So choosing between white label brokerage and going and running your own full-fledged brokerage comes down to a few different things. Primarily technology costs in the beginning. So when you're looking at your budget in the first year of the broker, whether you acquire a white label of an existing platform or you go and acquire your own server technology, really comes down to your budget and how much you want to invest. And white labels are often preferable in the first year of the business because the focus is really on getting into the black as quickly as possible, right? Recouping the investment that you made into the brokerage and starting to earn profits month over month. And the white label is a nice solution because it allows you to achieve that in a shorter period of time. Mind you, with a fully branded platform that has your broker's logo, from the front end perspective of the client, all they know is your broker and your brand. And so you're really achieving what you want to do in the first 6 months or the first year of your broker, which is get your brand out in the market, get it recognized, start to onboard hundreds and thousands of clients. And then at a latter stage, if you decide to acquire your own platform or acquire your own server, which does have its pros, you can pursue that at a later stage. That is usually more preferable. What this does is it saves a lot of your investment dollars in the first year as well to put towards marketing and sales, which are really the drivers, the growth drivers for the brokerage forever, really. But in the first year, it's critical that you see the ROI that you're looking to get, your cost per keeping your cost per acquisition as low as possible. And so freeing up as much of your investment dollars as possible to pursue those activities is generally in the best interest of the broker. When it comes to regulation, you have a variety of options because the market is regulated by jurisdiction. And so if you're starting your own broker, many times you're most familiar with the regulation in your own territory. And so it's important to recognize, though, that it is your business is a global online business. Despite, with respect to certain territories that you definitely have to get regulated to do business and pursue clients from certain countries, for the most part, the world is your oyster as a broker. And so where you get regulated is a business decision. It comes down to what makes the most sense for the broker based on our goals, based on the target markets that we're going for, based on our budget. Do you want to avoid capital requirements, for one, is a big question. The solution that we have at Forex, one of the solutions we have at ForexOfficials, allows you to launch the brokerage while avoiding capital requirements, which can be huge in the first year of the business. Imagine having $500,000 of free investment money or $250,000 of free investment money that you can put into growing the business in the first year, rather than having to tie that money up in a capital requirement, which really doesn't achieve much outside of get you going down the path of regulation. And so where you get regulated is a very good question. It's a commonly asked question. It's something we consult you on individually. We need to learn a little bit more about you and your brokerage. But for the most part, avoiding capital requirements in the first year is generally in your best interest. And as you grow, as you pass a certain number of clients under your brokerage, call that number 5,000 clients, call it 10,000 clients, then you might find it's in your best interest to step up to a higher level of regulation, which there are many options. We can help you get regulated in the UK, in Europe, in Australia. There are advantages and disadvantages to each location, and that's why we speak to you one-on-one to get a better grasp of where you're coming from and what you're trying to achieve. Choosing the right platform is critical for the business because this is tied to your brand. It's going to be the platform that you're running with for the near term and the long term. You always have the option later on to add to your platform offerings should you choose to, but the one in the beginning is going to be the staple of your brand. And so that has implications both on the front end for the users, for your clients, and on the back end. And so you really want to speak to us to fully understand what your options are in that area, what you want your clients to see on the front end, what you want them to be trading on as far as aesthetics go, but most likely more importantly the availability of certain instruments, So do you want your clients to be able to trade not only FX pairs, but as well as CFDs on a variety of instruments? If that is the case, which the modern day trader, if you're targeting European countries, Asian countries, CFDs have exploded in popularity, so you probably want to make sure that you have the range of instruments that your traders are ultimately going to demand of the broker. And we can help make sure that that's what you're offering. And you want a back end, a back office that is easy to use and that's easy for you to manage and perform all of the operational tasks that the broker needs to perform. Many times new brokers are, in some cases, the sole proprietor. Oftentimes it's 2 or 3 partners working together in the beginning. And so you want a back office that's easy to use among the partners, sharing of information and all the different variety of tasks that you need to perform in the back office. And so we help you understand how the back office of most platforms operate and help identify the one that makes the most sense for you. When it comes to matters of confidentiality and legality for the broker, there's really different realms you have to pay attention to. Probably the most sensitive one is client information and client funds and how they are handled. In 2017, there's a lot of infrastructure when it comes to back office setups, when it comes to how bank accounts operate around the world, how payment service providers operate, that already has built-in protections when it comes to client confidentiality. So that's a good thing for you as a broker. It saves you a lot of time and headache and things to worry about. That said, there are certain rules that you need to play by regardless of where you go get regulated, and we get you up to speed with those. So we make sure leading up to launch of your brokerage and post-launch of your brokerage, you are very, very familiar with how to handle these sensitive items, because at the end of the day, the majority of your clients, if not close to all of them, you will never meet face-to-face. People are opening accounts with your brokerage online for the most part, are depositing money and withdrawing money from distant places. And so there are very specific guidelines that you should follow in each of these areas. Nothing really complicated, but we take you through it. So stand by for that as you move forward. Setting up your back office in the beginning usually is quite simple because, the core activities that are taking place is the onboarding of clients, the adding of deposits, the adjusting of balances as appropriate, perhaps moving accounts from different places to within the back office depending upon how the client trades are being executed. And a big question for new brokers is, let's really zone in on how we make money. And the back office makes that extremely transparent if you know how to operate it. So the real question comes down to the counterparty to client trades, because FX and CFD trading is an over-the-counter market. It's not exchange traded. And so who the counterparty is to your client trades matters. And that counterparty could be your broker itself, or it could be a liquidity provider in the market, or a number of liquidity providers, depending upon how large you grow, how fast you grow. And so that has implications in your back office as well. And so that's an exciting thing. If you're growing fast, these are things that you really need to understand, because as you get into the hundreds and thousands of clients, how you manage the risk involved with each of those clients might differ from one client to another depending upon a few different factors. And so our consulting solution really takes you through this from the beginning. So even as you're onboarding your first 10, 20, 50 clients, we cover this territory with you very early on so that you understand it completely and you have that knowledge to take with you as you get into the larger number of clients, because you'll need it.